So it's 2021, and maybe you're looking at some information on what you need to do to get a house. Maybe you've heard about the FHA loan. You live here in South Carolina, and you want to know more information about what the FHA loan is, what are some of the changes applicable to the FHA for 2021, and if you qualify. So in this video, we're going to go over those changes for the FHA loan program, who it's for, who it's not for, and specifically for you folks here in South Carolina. So stay tuned. All right, so the FHA loan is actually part of HUD. It's governed by HUD. Basically, they're going to control who is eligible, who it's for, and they're based off of conforming loan limits. So like conventional loan limits, whatever they are for the year, the FHA calculates based on those. They look at low income areas and high income areas. Now here in South Carolina, most areas in the state are going to be low income areas. So what is a low income area? Low income areas are going to be pretty much all of Greenville, Spartanburg, and the upstate. So in Greenville, Spartanburg, and most of the upstate, it's going to be right at $356,000. That as long as you, if you're like a one family household, then you can go up to that price. FHA will loan up to that $356,000 and some change mark. So as long as we standard that, you're good to go. Now in other parts of the states, if you're watching this video and let's say you're down towards the lower part, Charleston, Sumter, Berkeley, down in that area, that a price is actually going to be higher. So that's considered a high cost area. You can actually, FHA will go up to $414,000. So that's some of the biggest changes right there in 2021 is that price that the FHA is going to loan has increased. So it's likely that we're going to see these prices even nationwide continue to go up through the rest, every year subsequently after that, every single year, those prices are going to keep going higher. Just cannot say that word, subsequent. What is it for? Okay, so if you go into the FHA website, like who's it for? Like what credit score do I need? FHA technically will go down to a 580. Now, I will say after Corona, a lot of investors, pretty much all investors, mortgage lenders, banks, brokers, they're going to have extra overlays. So even though the FHA will let us go down to 580, if you have a credit score that's really, especially under a 620, but really anything under 640, it's going to be more expensive for you to get. So the FHA will allow you to put as little as 3.5% down if you have a 580 credit score. But like I said, most investors and lenders are going to have extra overlays and want you to have an even higher credit score. So if you're under like a 620, there may only be a few investors that would even give you a loan that would approve it for the FHA loan. And even then it's going to, your rate is going to be higher than it would be if your credit score were over at least a 640. That 640 mark is going to be the magic number for FHA. Now that's not to say you can't get it lower than that. And you probably could, but if you're between like a 600 and a 620 on the FICO and you find an investor that will give you the money for that loan, your rate is going to not be as good as if you just took a little bit of steps, boosted up your credit. Got plenty of other videos. We won't go down the rabbit hole on that, but just keep that in mind. That's going to be a big thing if you are a first-time home buyer, or even if you're not. Even you don't have to be a first-time home buyer, to get the FHA. That's not any kind of new requirement. You can still get it as long as you're going to be living there as your primary residence. Now, there are some downsides to FHA. Some of the requirements that are not going to go away is going to be the mortgage insurance. So one of the major downfalls is that, yes, even though FHA is good for like first-time home buyers and people with less than perfect credit, I consider, really, if you're under a 700 credit score, FHA is probably going to be a better option than a conventional loan. But there is mortgage insurance. And even when you have a 20% equity in the home, you're still going to have that PMI for the life of the loan. Whereas with other loan programs like a conventional loan, once you have a 20% equity in the house, so meaning you have 20% loan to value there of what the house is worth, then that mortgage insurance will go away. So that right there is going to give you a lower monthly payment. So that is a downside to FHA. One downside is that you're going to have to pay that PMI. So what do you need? What do you need to actually do to get approved for an FHA? Well, you need to have at least a credit score. So if you're watching this video, you're living here in South Carolina, you want to, maybe you're a first-time home buyer, you're trying to get things in order, or maybe you're not a first-time home buyer. Regardless, you want to get a house. You know though that you need to go FHA. You don't have you don't have a large down payment saved up. You only have a little bit of money saved up. Well, let's go ahead and make sure you have a credit score. So before you go talk to a lender or anything like that, go to a bank, know what your credit score is, all right? See what's actually on there. You can go to annualcreditreport.com. You can see what it is. You can find every 30 days you can get a new report now. So this is worth doing. It doesn't cost any money. And then also if you don't have any credit, so let's start building some up. So as you're checking your credit, annualcreditreport.com, wherever you go, just start building up some credit. If you don't have any credit and you go try to get an FHA loan and you don't have any scores, lender, the bank, the broker, they're gonna tell you, hey, we can't get you approved. So at least start going out. The best way, the easiest way, is to just get a couple secure credit cards. If you're watching this and your credit is bad, you have some collections, look at my other videos on my channel that go over how to get your credit fixed, how to start taking those steps. But if you just don't have any, just go get some credit cards. There are plenty of great options out there that I recommend or that you can just Google that are meant for folks trying to build up their credit. The important thing to remember though is if you don't have a credit score and you are wanting to get that FHA loan, use the credit cards for things like gas and groceries. So whatever limit they give you, and I know I talk about this, it feels like I'm beating a dead horse in other videos, but if you have a credit card, just keep your balance under 30%. Like a lot of people don't want to use credit cards because they've gotten in trouble with them, you know, in the past. So just make sure that you're smart with them and they can actually be a good tool so that you're using maybe 30 or 40 bucks a month on gas, on groceries. Now your score's going up and within a few months you'll be able to go and then get your credit checked, go do an application and get approved for FHA. Just, it helps to make sure though, since it is a government loan, if you have any kind of federal debt, so if you have like student loans, this stops people a lot because I'll see folks with, you know, student loans that maybe are in collections or they'll have a federal tax lien or a judgment. Any kind of federal debt, or if you're delinquent on any kind of federal debt like that, it is going to impact you getting an FHA loan. It's going to come up on the fraud alert. It's going to come up on the credit report under the judgments and liens if you have any of that. So just keep that in mind. Obviously, if you have that, you're going to know. Maybe though you don't. Maybe you have something and you don't know that you have a tax lien. That's kind of rare, but another reason why you want to check your credit and just be familiar with what's on there. And then lastly, the FHA is meant for folks that are going to live in the house. So you can't, like I've had people come to me and they already have a house and they want to get another one, but they're not necessarily going to live there. One of the borrowers on the loan application has got to like live there as their primary residence. So that's really who it's geared for, is folks that maybe don't have the best credit. They want to revamp things or save some of their money and put as little down as possible and get into the house that you want here. So those are the major changes to realize with FHA here in South Carolina. Mainly the increased price has gone up, and just knowing that it's geared for you here if you're trying to get into your house with an FHA loan in South Carolina. Hey, thanks for watching this video. If you want to see more information about this, about related to buying a house, getting your credit up, then check out the other videos on my channel. And if you're wanting to get pre-approved for a new home here in South Carolina and you want to know the latest strategies to actually get your offer accepted in this super competitive market, then click the link below and it'll take you to my online application and you'll be able to get all your information that me and my team will need to review your situation and get you into your new home.